world of medicine, where every decision can change lives, your peace of mind is crucial. This is where Pattern steps in. Imagine insurance made simple, fast, and personalized just for you. With Pattern, you're not just getting disability and life insurance, you're ensuring your future and protecting your greatest asset, your income. In the past 10 years, Pattern has transformed the way over 20,000 doctors secure their financial well-being. Discover the simplicity of securing your future at patternlife.com or click the link in the description.
We work hard as physicians to take care of the health and well-being of our patients. But when it comes to our money, do we have the same condition of care? Probably not. Let's change that together. Welcome to the Financial Freedom for Physicians podcast, where we'll fight and advocate for your financial literacy. As always, I'm your host, Dr. Christopher Liu. Thanks for being here. Let's jump into the show. Hey guys, welcome to this week's podcast episode, and I'm really delighted to introduce our guest for today, Rob Natale. He's founder and CEO of North Square Capital, which is a real estate investing firm, and he helps medical professionals achieve financial freedom through passive real estate investing, real estate investments. I'm really happy to have Rob on the show and pick his brain. So Rob, welcome.
Yeah, good stuff. Thanks, Chris. Thanks for having me on. I appreciate it.
Start off with, your background, your story, how you got into and how you founded North Square Capital.
Yeah, no, absolutely. So I used to work in really the Wall Street world. So I used to, large asset management company here in Boston called Columbia Threadneedle Investments, and worked with financial advisors out in the Pacific Northwest, so Washington State, Oregon, and Alaska. And the folks I worked with could range from managing assets from, let's say, 20 million up to $3 billion in assets. And what I was finding, Chris, was the higher up you went as far as the assets being managed, the more they were utilizing strategies that many more individuals should be utilizing to help build their wealth. And one of those specifically was around real estate syndications. So I talked to my I had 3 family members in the medical field, and I would chat with them about, what your financial advisors were doing to help build out your portfolio, and pretty much putting, 60-40 portfolios, maybe target date retirement funds. And it was very much, if the market went down, hey, we got to ride it out. And while advisors, they were collecting, somewhere around like a 1% asset under management fee or an AUM fee. And I was just really seeing how poorly the medical community is being served by the financial services industry. And it kind of got to a point with me where I really was no longer comfortable being in that world anymore, just from a moral standpoint. And I'm not here to say all financial advisors are like that. For those of us a financial advisor who's listening, it's not everybody. But in my experience in that world, it was enough for me where I said, this is just not a good fit. And what eventually happened, Chris, it led me to starting my company. I saw the benefits of real estate through that experience. I said, okay, I want to start North Square Capital. So like you mentioned, it's a privately held real estate investment firm in Boston, and we are geared in helping medical professionals buy back their time and expand their wealth through passive real estate investing opportunities so they can experience all the benefits that truly come with real estate investing, but without the hassles that comes with being a landlord.
Yeah, and I love that. And a lot of physicians and medical professionals are now tuning into more passive because there's the headaches of being a landlord, and just, you can achieve scale much rapidly. And when you have pools of capital, I think, the audience is very familiar with real estate, so we'll kind of bypass the basics, but one thing that's really of interest for the audience out there is this idea of this economic climate. Because last year everybody was afraid of a recession, interest rates. I heard a lot of real estate firms didn't do as well just because that, the multifamily. So what are your kind of thoughts on where we are now and where we're headed? I know this is going to be a really pivotal year with elections and, is the Fed going to drop rates or keep it? It's really a pivotal year.
Yeah. All right. So I could go a lot of different directions with that one. So I think I'll start with the one that I feel people are constantly hearing about on a day-to-day, week-to-week is inflation and interest rates, right? I feel like that is just is on the news all the time. So my expectation myself is that there is going to be a maximum of one interest rate cut this year. That's my personal opinion. And the reason why I think it's a maximum of one is ever since the Fed started raising rates, when they started raising rates, they raised them much faster than anyone thought was going to happen. They have held rates steady longer than folks expected, including the market. And as far as when the rate cut is going to be, it's going to, I think, take longer as well as what the market expects. Like that pattern has remained pretty prevalent. And when you hear, like they just came out with some new inflation numbers today from a PCI perspective that were in line with the market. But a March rate cut is pretty much off the table. Some folks are saying June. But again, I think it's a maximum of one. I think it's going to be rates kind of higher for longer is my really base case with that. So that's kind of from a rate perspective. Then you ask Chris about kind of real estate. I think you mentioned about what's going on in that world, commercial real estate, what's going to happen. So I agree that you're going to see, I think this year especially, a lot of, I think, made headline news with a lot of different operators and in different asset classes. So I think the one that everyone is most commonly hearing about is office space, right? Across, just because what's happened domestically across the country with now remote work and really the trouble that office space is in. Now, in the multifamily world, what's going to be interesting is a lot of operators and general partners, when they acquired properties back in 2021, right, they got into floating rate debt. Usually those terms can either be a 2 or 3 year term, and you have the ability to buy an interest rate cap on those when you go about and getting into floating rate debt that can cap your rate at a certain amount. Let's say the rate's at 4%. You say, okay, we can't go any higher by your buying that rate cap. It's essentially like insurance, right? For those out there, Chris, you could have bought it for pennies on the dollar and nobody thought, hey, rates are all-time lows. A lot of operators did not buy interest rate caps. Well, what's going to happen is there's going to be a lot of loans coming due. And now if you try to refinance those loans, you're trying to refinance where the rates are double to what they were when you got into the loan in the first place. And the deal is no longer pencil. They no longer are in the money. And that's going to mean a couple things. One, for sellers, I think could happen. So it could present a number of different opportunities. And another piece that you might be seeing in the audience out there that is listening that you might be getting notifications on is different groups now offering preferred equity out there. So what they're coming in and saying, hey, we're going to go in. We have a lot of confidence in the operator executing the business plan. The property is high occupancy, rents are coming in, but unfortunately, they need now excess capital in order to stay afloat during this period of time. You're going to be seeing, I think, a good amount of that. I myself have noticed and have talked to some groups that are doing that myself. And the other piece is going to be from a bank perspective, if there's going to be allowed from extensions. And I think banks looking to work with those groups to try to say, hey, what can we do to try maybe give out another extension?
It's quite interesting because I'm talking to a lot of experienced professionals such as yourself. This idea of the March interest rate cut being off the table. And then what's interesting, they're saying that if the Fed doesn't cut soon, they're going to be seen as trying to influence the elections, Democrat versus Republican. So they were saying, by June, if they don't, they kind of have to, because they don't want to be seen as biased or anything, which is really interesting. And then, you talked about commercial and then the office space, which is really struggling now. But I know there's sectors of the real estate that's actually thriving. I recently read on data centers, industrial, senior living. Talk about these different niches that are potential opportunities for investors.
Yeah, no, absolutely. And as you know, Chris, in your audience, there's so many different asset classes in commercial real estate that you can go into. You just named a number of them, right? There's also retail, hotel to multifamily conversion, mobile, RV parks, etc. And each different asset class, provides its own different strengths and unique opportunities when you're going to look to invest in. So myself personally, and this is kind of part of where my role and responsibility comes into, Chris, that I can talk to a little bit about. My focus right now is really under like three different buckets or three different asset classes. One is value add multifamily. The second is a short-term rental portfolio. And the third is a real estate debt fund. Those are the three that I'm focusing on. And that's predominantly due to the fact that I have found general partners, sponsors slash operators all can be used interchangeably that I feel very confident in working with. So for those out there, to give a little more background and really my role and responsibility, North Square Capital, I operate as a capital allocator. So I am going out and I am vetting not only the specific and different operators, but then I am vetting also different opportunities. So in talking to different operators, it's conducting the due diligence on them as people, human beings, right? When we're going through, say, is this someone that I would feel that is a good steward of my client's money and my money? Because I myself am a real estate investor. Do our moral compasses are aligned? Can I see myself working with them for 3 to 5 years? Right. And it goes through a number of different conversations of how do they handle conflicts of interest amongst their team. Talk to me about a certain experience that didn't go as planned. What did you learn from it? Running criminal background checks. And then if let's say that box is checked and they have a specific then opportunity, then it's looking through and going into the numbers and the figures, like looking through the underwriting. Does the business plan make sense based on population growth, job growth? What's the exit strategy? Do all those things line up or say, okay, I like the team, feel comfortable with the team. Now, how's the business plan line up with that? And if both of those align, that's where then I invite my clients and say, hey, I am going to be investing in this opportunity. Would you like to come in, partner along myself, and invest alongside myself and North Square Capital in the opportunity? And that's really where the focus is right now on those three asset classes, due to finding groups I feel very comfortable and confident in.
Yeah, I have two broad questions. First is
Yeah.
so I'm just running a playbook scenario through my head, and one thing is, if the Fed keeps these interest rates higher,
Mhm.
let's say for example, smaller to mid-sized banks could fail. There could be a credit event, and then the Fed may have to step in, and or if there's suddenly a downturn. Talk about kind of these type of black swan events that could potentially impact what the Fed does, and of course interest rates in the real estate market.
Yeah, so I think right, and it's funny, you're talking about the Black Swan event, which is kind of like an oxymoron because Black Swan is an event that you don't even think that can happen, right? You don't even think it exists. But I mean, if you look at some of the smaller, more regional banks, it's all about kind of how much weight they have in each different asset class. Like, I think if they're more heavily weighted in the office space, yes, is definitely going to cause, I think, more stress than, let's say, like we talked about in multifamily. As far as what you mentioned about interest rates concerned, and I think you mentioned, I'm just trying to pull it back in my mind, Chris. I think you asked about what the rate impact could be on these type of investment opportunities. Is that the question, Chris?
Yeah, say for example, we have like,
Yeah.
some all of a sudden a bank goes down, or all of a sudden, a number comes out and, it triggers something, or and the Fed is forced to step in, kind of, adjust interest rates, kind of manipulate things and, calm markets.
So it's going to be interesting. They could step in like what happened last year, almost around this time, right? When there was a run on Silicon Valley Bank, and right, first FDIC insured up to 250,000. They said, you know what, like, we're removing that ceiling entirely, and there really is no limit. could you see something like that maybe come in for depositors? I could see that type of scenario. The thing is, if let's say there was an issue, what you're talking about with the banks, right? And you talked about the Fed stepping in with an interest rates. That piece I candidly don't see happening because they'd have to cut rates. It's pretty substantial then if we're talking about, hey, we want to help out some of these general partners and operators refinance their loans. I mean, they'd have to be hundreds of basis points. So well above 1%, 2%. And to do that type of dramatic rate cut, what the impacts that would have from an economic standpoint, that I don't see happening at all.
Yeah, it's just quite interesting. I just like to play these doomsday scenarios because it's back in 2020, like I was for sure Trump was going to get reelected because the economy was so good. And then all of a sudden COVID hit and it was just like, it was a whole shit show after that. The next question is, for the investors out there looking, there's so many opportunities, especially in this time. So how can they start preparing? I know like cash and, kind of in looking into firms such as yours that have specific strategies, that have, good moral compasses. How can people start positioning themselves to take advantage of what's to come ahead?
Yeah, so I think the first thing I would say is for folks out there who, right, starting who have never invested, right? You kind of break it down, I think, into two different buckets of first getting educated about really the syndication world, which we've talked about, right? Limited partners come together, they're pooling their assets together, investing in a larger partner property where then they're relying on the general partner to execute the business plan. That's the first piece, getting education to see, is this a right fit you think for you? And then if you think, yes, this is something I want to dive further in, whether someone speaks myself or somebody else, then that first call or conversation really needs to be, I'd really call it a discovery call or a clarity call, and if you're a physician or someone in the medical field, kind of think of it as a first appointment between a physician and the patient, where except this time the roles are reversed, where maybe someone in my world might be kind of operating more as the physician, and then you would be the patient. And it's really, think about it, the first time you go see a physician, like it's a lot of questions. It's questions. It's finding out, hey, can we be someone that can help you get to where you want to go financially? Using the analogy from a medical standpoint, if we are, great. If we're not, then let's go look to refer you to someone else or trying to put you in contact with someone else who we think would be a better fit, right? And kind of, again, going back to the physician and the medical space analogy, maybe referring out to another type of specialist, what have you. So that's really what that comes into play as far as those conversations. Then when there's an opportunity, then that specific opportunity is discussed. And for those who are already investing, if they've already been investing in one specific asset class and they've always been intrigued about maybe learning about different other asset class, kind of falls in the same bucket from the education standpoint, right? I think they know at least what the syndication world is, and if they know that's a fit for them, so that one extra step, then it's really a matter of if there's been an asset class that maybe they wanted to learn more about, or they're looking for a different benefit. Let's say they're looking for something more liquidity wise or something has a shorter hold period than, let's say, 3 to 5 years. What asset class could offer them something like that?
Yeah, it's really interesting because we're living in really interesting times, and you were talking about educating yourself, and really, if you really know what you're doing and you educate yourself and you partner with the right clients and with the right firms, and you see where the trends are going, you can actually divest into different things, and you actually can navigate these turbulent waters. So now is a great time. It's almost like 2008 when everything was just fire sale. Yeah. So how can people find out more about you? And you mentioned discovery call, see if it's a good fit, and again, good moral compass, and reach out to you, work with you, etc.
Yeah, no, absolutely. And to answer that, kind of the way that I like to kind of operate and structure too, as far as before giving you just some of the contact info is, and as medical professionals, it's the Hippocratic oath, and one of those is, right, one, do no harm. I try to do something more from like a financial Hippocratic oath, so to speak, and it's really, right, don't lose money. Operate and look for risk-adjusted returns. for my clients. As far as where I can be reached, it's a couple different areas. So I'm actually more active on Instagram than LinkedIn. I am on both those. So I mean, Instagram, it's Rob Natale _. LinkedIn, it's my name, and also website northsquarecapital.com. I know all that information will be shared in the comments within the podcast. And I also have that you can also find is an educational ebook. I talked about education. So I've created something called the Financial RX Playbook, How Medical Professionals Win Through Passive Real Estate Investing. That really consists of the risks, the benefits of this type of investing, certain questions, certain things to look out for when vetting a sponsor, frequently asked questions in the space. It's strictly an educational resource. Anyone who wants to have access to that, obviously, please feel free to reach out. I'm happy to get that over to you. And yeah, those are the easiest ways I would say to contact me, Chris.
Yes, on the show that really have a good heart and really, like I said, a strong moral compass. And first thing is do no harm and out for their clients' best interest as opposed to just kind of getting a portion of the sales. So, and then from there, you can start to work with clients and see if they're a good fit. Be sure to reach out to Rob. He's on LinkedIn and Instagram. Check out his firm, North Square Capital. Schedule a call if you see if it's the right fit, and always do your due diligence. And with that, thanks so much for coming on.
Doctors dedicate their lives to caring for others. It's time someone took care of you. Visit patternlife.com to simplify your path to peace of mind. Patternlife.com, simplifying your insurance journey.
I'm excited that you made it for another episode. You are truly the best. If you've been following the show for a while, you know that my passion is to bring you the education you need to find your path to financial freedom. Please come back week after week for new content, new resources, and great guests. Until then, if you haven't already, please be sure to check out the website, www.drchrislewmdphd.com for more support. I'll see you next week.